So you're trying to get approved for a home loan, and your loan officer has just shared with you that you have to go through something called manual underwriting, or that they can't help you because they don't allow manual underwrites. Well, today we're talking all about FHA manual underwriting. So if you have been denied or want to learn more about the process, this video is definitely for you. Hello again and welcome back to the channel. I'm Shakelia LeBlanc, aka the Loan Slayer and your mortgage advisor. Today we are talking about manual underwriting, specifically for FHA loans, and I'm going to explain the difference between a manual underwrite and an automatic underwrite. I'll also share with you how you can still be approved with a manual underwrite. If any of these terms are unfamiliar to you, don't worry, I'm going to break them down in a way that's super easy to understand. So let's start with the basics. What is AUS? AUS stands for Automated Underwriting System, and it's a tool lenders use to quickly determine if you qualify for a mortgage. It's a computer system that reviews your file and uses the information to make a decision. Now, there's still an underwriter that actually reviews your income, credit, and assets to make sure the information is accurate and we are following the guidelines. But as long as AUS says yes, the underwriter will give the final approval. The idea behind AUS is that it can give a faster and more consistent result based on the guidelines set forth by the loan program you're applying for. It's basically AI for mortgage underwriting. Once we run your application through the AUS, it will spit out an approval message. There are two main messages we will see. Number one, accept or approve. This is the result you want to see. It means you meet the guidelines and can move forward with the loan process. Number two is a refer or refer with caution. This means that something in your file doesn't fit with the AUS guidelines or algorithm, and it needs more review. Basically, the automatic system can't approve your loan, but it doesn't necessarily mean you're denied. So if you get an accept or approve message, you're good to go. But if you get a refer or refer with caution, it means that your file will need a manual underwrite. Manual underwriting means that instead of relying on the automated underwriting system, an underwriter will take a closer look at your file and make the final decision. This process is more thorough, and because there's no automated system doing the heavy lifting, it can be a little slower and more detailed. So here's the thing. Manual underwrites come with stricter guidelines. The underwriter is going to want to see more documentation, more proof that you can handle the mortgage, and that you're not a high-risk borrower. So let's talk about how to get approved with manual underwriting. While the guidelines are stricter, it's definitely possible to get an approval if you meet certain criteria. Let's start with credit. The rule is on installment accounts, there can be no 30-day lates in the last 12 months and no more than two 30-day lates in the past 24 months. No new non-medical collections or charge-offs on installment accounts in the last 24 months. Installment accounts, remember, are things like auto payments, personal loans, student loans, and of course, mortgages. On revolving accounts like credit cards, there cannot be any late greater than 90 days, and you cannot have more than 3 60-day lates in the last 12 months. No new non-medical collections or charge-offs on revolving credit in the last 12 months. As far as assets, for a manual underwrite, you will need reserves. Reserves are the funds you have left over after closing. For a 1 to 2 unit property, you will need 1 month of mortgage payments or principal, interest, taxes, insurance. And if you are purchasing a 3 to 4 unit, you will need 3 months of reserves. Now, for housing history, you cannot have any 30-day late in the last 12 months. This is for mortgage and rental history. And we will do a verification of rental history or mortgage history to confirm this. If you are living rent-free, staying with a family member or friend, we will also need a rent-free letter signed by the person that you are staying with. Your DTI or debt to income ratio is also going to be restricted on manually underwritten loans. DTI will be capped at 43% unless there are compensating factors. Compensating factors are positive elements in your financial profile that can help offset any risk the underwriter might see. I'm going to insert a chart here on the screen to show you what are acceptable compensating factors if you want to be approved higher than 43% DTI. Now, looking at the chart, you can see if you have at least a 580 credit score or above, those factors include 1, residual income. This is the money you have left over each month after all of your debts are paid. 2, cash reserves. I've already shared with you that you have to have at least 1 month of reserves to even do a manual underwrite, but to use it as a compensating factors, you're going to need 3 months of reserves. Number 3, minimal increase in housing payment. This can be used as a compensating factor if your housing expense is not increasing by the lesser of $100 or 5%. Number 4, significant additional income not reflected in effective income. This basically means you have income that you have that we are not already using to calculate your DTI. So if you work overtime and we are not able to use that as effective income for you, we can still use it as a compensating factor to show that you have some additional income. The absolute max on a FHA manual, as you can see, is 50%. You absolutely cannot go over that ratio. It's important to also note that not all lenders will do a manual underwrite. Some lenders only work with AUS results, meaning if you get a refer or refer with caution, they won't move forward with your application. You will be denied. As a mortgage broker, I have access to multiple lenders, which means I can shop around for you. If one lender doesn't allow manual underwriting, I can find another that does. It's all about having more options and finding the right fit for your situation. So if you've been denied by one lender, don't lose hope. There are other lenders out there, and as a broker, I'm here to help you explore all of your options. So there you have it. That's the difference between a manual underwrite and an automatic underwrite. Manual underwriting is more detailed and comes with stricter guidelines, but it can still be a path to getting your mortgage approved. If you have any questions or you want to know what's best for your situation, feel free to drop a comment or reach out to me directly. I'm always here to help, and don't forget to like and subscribe for more mortgage tips and advice. Thanks for watching. I'll see you in the next video.